Hi, everybody. Joe Sabos, your Realtor Dad. Little special edition today. We're going to go off topic from real estate. Reason being, I was down in Florida because that's where Realtor Dad likes to hang out when he's not selling real estate in winter. And I was on the putting green, and true story, I heard two older gentlemen, probably in their mid 60s, get into an argument about the subject of GameStop, Reddit, and the hedge funds. I was thinking to kind of picture your uncle who drinks too much at Christmas and your dad getting into an argument about something. You don't know what they're arguing about. So I thought I'd just explain it a little bit so you guys could understand it if that argument comes out and you guys hear it. What happened is there's two different groups. So Reddit is, as you guys know, a platform that people online group chat, right? People get together as a group, they review things, they do things. Well, they created a group called Wall Street Bets, which is a group within Reddit that now has 6 million people in it, right? It's a very big, very strong group. And they talk about different things for investing on stocks and securities, so forth, so on. They use an app called Robinhood, which is kind of like E-Trade, Charles Schwab. It's an app that you can use to make online trades. And all online trades now can be done for free. So it's really gained a lot of popularity lately. This group got together, we'll just call them a band of merry people on Robinhood. They got together as a group, and what they saw was this other group, or the hedge funds, right? And the hedge funds have been around for a long time. Some like them, some people like them, some people don't like them. In this particular case, there was a very small percentage of the hedge funds were doing what's called a short sell on GameStop. I'm GameStop in the middle, right? So what a short seller does is they're betting that GameStop is going out of business, basically. They're saying that they've peaked as a company, they're going to steadily go down, and eventually everybody's going to be buying their stuff online, so a retail store like GameStop isn't going to be around for very long. These hedge funds are betting that it's called short selling this company called GameStop, right? So at that point, January 1st, the stock of GameStop was worth $17.25. They were short selling it, basically betting that that stock price was going to go down from there. Right? They, as a big group, the hedge fund, put lots of money into this short selling bet, right? The group on Reddit, the Wall Street Bets, 6 million people got together and say, look, if we as a group bet the other way, right, that we bet that the stock's going to go up and we start all buying the stock together, we're going to drive that price up and we're going to cause big problems for the hedge fund. So that's what they did. They started buying the stock in bulk on the beginning of January, right? Buying it. And there's only so much stock, and supply and demand takes over. When they're all buying the same stock, it's driving the price up to a point, a peak on January 27th, where the stock went to $347.51 at the peak, right? But what that did was cause the short sellers a big loss on the way up because they're betting that it was going to go down, and they have all this money bet that it's going to go down, and when it goes up, they lost billions and billions and billions of dollars, right? Side note, when you think hedge funds, think Bobby Axelrod from the movie Billions on HBO. That's kind of like how people view these people, not always the cleanest. But it's really a small percentage of these people that kind of do shady stuff. That's where that argument was going back and forth between the two older gentlemen. One really didn't like this group, and the other really didn't like this group. And to be honest, I really have no opinion about either one. So where this group got in trouble, and this is like your everyday investor, your band of merry people getting together to drive up the price. Well, great, they made a lot of money on the way up, and a lot of people were buying the stock. But what do you think happened to the people that bought it at the peak at $347.51? And then it crashed, and it's now at $92.54. That means the stock went down $255 per share in value, right? And it's still probably overvalued to what it's really worth. they lost a ton of money as well. Some of the people, some of the 6 million, as they drove that price up, probably made a lot of money, but more people lost money on the way down than people made on the way up, probably. So I just wanted to give you a short explanation of what happened, how it happened. There's probably going to be more of this because when you have a group that's 6 million strong and they all put money towards one direction when it comes to stocks and equities, they can have a lot of impact on things. So there's other things out there like AMC theaters that they're targeting. Silver in the last couple of days was targeted as something that they were trying to drive the price up on. Always have a good stock advisor. Never ever go it alone in something like this. But I just want to give you a quick explanation of what's happening, and hopefully this helps you. The other day, guy walks into a building and he goes in and he walks up to the clerk and says, "Hey, I'd like to get a burger, a shake, and fries." And the clerk says, "Sir, this is a library." He says, "Okay, I'd like to get a burger, a shake, and fries." Have a good day.